Hey guys, Joel Frank here, market analyst for YouTrading, and this is the midweek market update. We've got some important risk events coming up this week. We've got the Fed deciding on interest rates today. They're going to announce their QE tapering plans, and what their tone on inflation and the prospect for rate hikes next year. That's the most important thing. But obviously, seeing the timeline for this taper program is also going to be very, very interesting. So markets could be a bit choppy on that. Then later in the week, we have the US labor market report for October. Now, we just had the release this morning of the ADP estimate. ADP is a US payroll processing company, and every Wednesday, before the official US jobs report is released on the Friday, every Wednesday they release their estimate. And that was strong. So that pretty much adds some upside risk to this Friday's NFP number. All things at the moment are pointing to the fact that it should be pretty strong, because some of the big constraints that have been holding back labour market supply, like enhanced unemployment benefits, and the fact that a lot of the kids in the US weren't at school. Kids are back at school and those unemployment benefits have ended now. So we're hoping to see about 500,000 jobs created. But anyway, let's have a look at markets, guys, and how things are responding. It's been 4 consecutive record high closes for the S&P 500. I've got it here. This is 4-hour candlesticks. And as you can see, it's just continues to rally, doesn't it? Strong earnings season is still going on. Most companies are beating on expectations. So now we're S&P 500 trading above 4,600. You got this support here. It was resistance at 4,600. Now it's turned into support, just in case we do get a bit of a pullback. And then also this uptrend here. So this area that I've circled potentially might be a nice area if people want to buy the dip in the short run anyway, as long as the FOMC isn't too hawkish and triggers a bit of a sell-off. Moving on to the dollar. Been choppy recently in the last couple of days. We had the ECB last week, which at the time caused some euro strength, but that's more than unwound now. Bounced from the 50-day moving average. If the Fed is hawkish in how they sound on inflation and the prospect for rate hikes, well, I think you'd very likely break through the recent highs here at 94.50. Just something to look out for, a break above the recent range. Let's look at bonds next, actually, not crude. We'll go on to crude in a second. Bonds, they're also testing the upper bound of recent ranges. Like I say, if the Fed is hawkish, you would think maybe we can go back to the bottom of this range. But these are longer term bonds. And if the Fed is more hawkish, then it might actually cause long-term yields to drop, which would mean we could break above this support, because remember, as yields drop, price rises. Because if the Fed hikes more interest rates, in the next 2 years, that might mean that in the long run, growth is slower because maybe they're a bit too hawkish, and the Fed doesn't eventually end up lifting interest rates as high in the long run. So just look out for a potential market reaction like that. We could break above here and then test the lows here from the 17th of September and mid-August. So that's something to just keep an eye on. Crude oil, it's kind of like we had this big surge up. Now we're having some consolidation. We've got the OPEC meeting this week. They're not expected to heed to the calls from the international community, like the US and others have been putting pressure on them to increase output because they don't like this spike in prices. But for now, this area here, just above the $80 per barrel mark, is holding up. And technically speaking, to me, this looks like a bit of a bullish flag. So it's where you have a consolidation period, and then you can get a bit of bullish momentum. And I mean, the analysts that I've been reading, their notes and stuff every day, most people continue to see oil as a buy on the dip because global consumption is significantly more than global supply at the moment. Which obviously supports prices. But yeah, anyway, guys, main things this week: Fed today, jobs data on Friday, Also, Bank of England tomorrow. If you're trading pound sterling, keep an eye on that. But that's it for this video. I'll see you all in the next one.